Have you ever watched a stock soar 200%, 300%, even 500% after you sold it for a quick 20% profit? That sinking feeling in your stomach, that voice in your head saying, "I could have been there"? Have those missed opportunities kept you up at night, wondering what separates the traders who catch these massive moves from everyone else? Today, I'm going to share with you the single most powerful setup that has consistently generated massive returns throughout market history. But this isn't your typical technical pattern or indicator combination. This is something far more fundamental, something that addresses the core reason why most traders fail to capture significant market moves. What if I told you the difference between mediocre returns and life-changing profits isn't about finding better entries, discovering secret indicators, or having insider information? What if the true secret was something so simple, yet so psychologically challenging, that 95% of traders can never master it? Has this ever happened to you? You spot a breakout, enter at what seems like the perfect moment, see some quick profits, and then that little voice whispers, "Take the money and run." You sell, feeling smart for banking a win. But days or weeks later, you watch in agony as that same stock continues climbing without you, turning what could have been a life-changing trade into just another forgettable transaction. The truth is, catching huge market waves isn't primarily about your entry. It's about what happens after you enter. It's about developing the rarest skill in trading, the ability to sit tight when the market is proving you right. This seemingly simple principle is actually the hardest skill for any trader to master, and it's precisely where the biggest fortunes are made. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Stay with me until the end of this video, because what you're about to discover might completely transform your approach to the markets. I'll show you why patience trumps timing every single time, and how the psychological urge to grab quick profits is the exact behavior that prevents you from capturing truly significant moves that create wealth. Think about it. Most traders, even intelligent ones with solid analysis, consistently sabotage themselves by treating the market like a sprint instead of the marathon it truly is. They jump in and out of positions, constantly reaching for small gains, while the truly life-changing opportunities slip through their fingers. Now imagine transforming your trading by mastering just one principle, a principle so powerful yet so contrary to human nature that implementing it could completely revolutionize your results. The concept seems deceptively simple, but as we're about to explore, it requires a complete rewiring of how you think about market success. If you want more insights like these on catching major market moves, hit that subscribe button. I'm constantly sharing the psychological truths that separate winning traders from the crowd. The transformation begins when you realize that what feels safe in trading is often the most dangerous path of all. That urge to lock in quick profits? It's not prudent. Money management, it's actually the silent wealth killer that most traders never identify. I call it the small profit addiction, and it's perhaps the most expensive habit in the financial markets. Think about this revelation. Every time you grab that 10% or 20% gain, you're not just taking a small win, you're actively shutting the door on potentially life-changing returns. It's like planting an apple tree, carefully watering it for weeks, and then harvesting the first tiny apple that appears. Instead of waiting for the full harvest, the psychological satisfaction of securing these small wins becomes an addiction, a dopamine hit that feels good in the moment but robs you of the substantial gains that create real financial freedom. Behind the scenes of every trading fortune ever made lies an uncomfortable truth. The big money isn't made from constant activity. It's made from those rare, pivotal moments when you catch a meaningful move and have the courage to ride it without interference. This mindset shift is profound because it completely contradicts what most trading educators preach about taking profits and staying active. I remember a trade that completely changed my journey in the markets. I had taken a position in a stock that was showing unusual strength. After a few days, it was up about 15%. Every instinct in my body was screaming to sell it and lock in the profit. My friends were telling me to take the money and run, but something about the price. Action told me this wasn't just an ordinary move, so I made the decision to sit tight. That one choice, that moment of restraint, resulted in a 400% gain over the following months. That single trade outperformed a year's worth of my typical in-and-out trades combined. This hidden truth about market success isn't just about making more money. It's about the impact that one well-ridden move can have on your entire trading psychology. When you experience firsthand how sitting tight through a major market wave can generate more profit than dozens of smaller trades combined, it changes you. You begin to see the market differently. Your relationship with time shifts. Your perception of risk transforms. You start to recognize that the patient trader who can identify strength and stay with it receives rewards that the hyperactive trader will never know. Now, I want to go even deeper into this topic by exploring how to actually recognize when you're in the presence of one of these rare, powerful moves that can create wealth. Because the challenge isn't just about having patience, it's about knowing when that patience will be rewarded versus when it's better to move on. If you've ever experienced selling too early and watching a stock continue climbing without you, type "left too soon" in the comments below. I want to know I'm not the only one who's learned this lesson the hard way. So, how do you actually recognize these rare wealth-building opportunities when they present themselves? The revelation that changed everything for me was understanding that being right in your market judgment is only half the battle. The other half is having the courage to sit still and let your winners run. This mindset shift is what separates amateur traders from market masters who build substantial wealth over time. The hidden truth is that the market deliberately tests your resolve through minor pullbacks and consolidations. These moments of uncertainty are like crossroads in your trading journey, forcing you to make a critical decision. Will you surrender to fear and exit prematurely, or will you demonstrate the uncommon discipline required to stay the course? Most traders choose the path of least resistance. They exit during these normal fluctuations, missing the substantial gains that follow when the primary trend resumes. Behind every massive market move is a story that unfolds in stages, not all at once. The market communicates through behavior, not words, and learning to interpret this language is a transformative skill. When you witness a stock break out of a range with real force, moving on volume without looking back, that's not just random price action. It's the signature of something significant developing. These powerful moves don't materialize out of thin air. They're the beginning chapters of potentially major trends that offer substantial profit opportunities for those with the vision to recognize them. I remember watching a stock that had been consolidating for months suddenly surge through resistance on triple its average volume. Most traders saw it as a quick opportunity to flip for a small gain. But the experienced eye could see something deeper unfolding. Institutional accumulation, a fundamental shift in market perception, the birth of a new narrative. While others jumped in and out for small profits, those who recognized the true character of the move and stayed with it captured gains that transformed their trading. Accounts. The authentic revelation here is that courage often beats timing. Even if you're not perfect with your entry, even if you don't catch the exact bottom, You can still capture the most meaningful part of a move if you have the emotional fortitude to ride through the inevitable fluctuations. This is where most traders face their greatest internal battle. The market will shake, rattle, and test you at precisely the moments when holding feels most uncomfortable. Yet paradoxically, these moments of maximum discomfort often precede the most powerful advances. Let me show you how to recognize the specific behaviors that distinguish a normal pullback from a true reversal. Because this discernment is what allows you to hold with confidence while others panic and exit prematurely. If you've developed the ability to hold through market fluctuations and have been rewarded for your patience, type diamond hands in the comments. I'd love to know who among you has already discovered this powerful truth. Here's where we encounter the most counterintuitive revelation in all of trading. The big money isn't in buying or selling. It's in the waiting. This insight completely transforms how you approach the markets, but it runs against our fundamental human wiring. We're programmed for action, for constant movement, for the dopamine hit of making decisions. The hardest journey for any trader is learning that sometimes the most powerful action you can take is no action at all. Most traders experience a profound discomfort during inactive periods because waiting feels like doing nothing. There's that voice in your head saying you should be more active or you're missing opportunities elsewhere. But this internal narrative is precisely what keeps most traders trapped in a cycle of mediocre results. The enlightening truth is that doing nothing at the right time is often the most profitable trading decision you'll ever make. Behind the scenes of every trading fortune is a story of remarkable patience. Not just patience through losing periods, but patience during winning periods. The discipline to sit still during favorable trends creates a boundary that separates the consistently profitable from the perpetually frustrated. It's like watching a garden grow. The growth happens whether you're watching it constantly or not. But the person who keeps digging up the seeds to check on them never sees the harvest. This brings us to a critical distinction that many traders never fully grasp: the fundamental difference between speculation and investment. While these terms are often used interchangeably, they represent two entirely different approaches to the market. Investors buy hoping stocks will pay them forever. They're committed to the long-term story, regardless of price action. Skilled speculators, however, ride moves while they last, then exit when the move is over. I had a profound realization during a trade that changed my entire market philosophy. I was holding a position that had already doubled, and I found myself creating an emotional attachment to it, imagining how it would perform years into the future, almost as if we were in a relationship. That's when I caught myself. The market doesn't care about my attachment. It doesn't reward loyalty. It rewards correct positioning at the right time for the right duration. The breakthrough moment comes when you understand you shouldn't marry a position emotionally. Instead, stay with it as long as it's behaving correctly according to your setup, then exit without sentiment when the technical signs change. This isn't cold or calculating. It's simply respecting what the market is telling you rather than imposing your wishes upon it. Let me show you the specific technical signals that indicate when a trend is healthy versus when it's beginning to deteriorate. Because knowing these subtle differences is what allows you to maximize your time in powerful trends without overstaying your welcome. If you've ever held onto a position for emotional reasons rather than technical ones, type emotional trader in the comments. Understanding this tendency is the first step toward transforming your approach. One of the most profound awakenings I've witnessed in traders comes when they finally recognize the pattern of self-sabotage they've been unconsciously repeating for years. It's that moment of clarity when they realize they've been getting the direction right, correctly analyzing the market, but completely undermining themselves in the execution phase. This revelation is both painful and liberating, like looking in a mirror and truly seeing yourself for the first time. The pattern plays out with remarkable consistency. A trader spots an opportunity, enters a position, watches it move in their favor, and then, just as the real potential begins to unfold, they cut it short. This decision is almost never driven by rational analysis, but by the twin emotions of impatience and fear. Impatience whispers, "Take the profit now before it disappears," while fear chants, "You'll regret not selling if it reverses." Together, these voices create an irresistible psychological pressure that few can withstand. I often ask traders to perform a simple thought experiment that reveals the magnitude of this self-sabotage. Consider how different your trading account would look today if you had simply held your winners 10 times longer. The answers I get are always accompanied by a look of profound regret, because most realize they would have achieved their financial goals many times over. The journey of transformation begins with this honest assessment of what could have been. Behind the scenes of market movement lies another truth that few traders ever fully grasp. Major market moves never unfold in straight lines. The path upward is filled with jiggles, shakes, and tests of your conviction. But here's the enlightening insight. These reactions aren't random noise. They're purposeful mechanisms designed to wear you out and make you doubt your position before the real move has even begun. Subscribe now if these trading insights resonated with you. I dive deep into the mindset and strategies that help serious traders capture significant profits while others miss out. I remember watching a stock that had broken out powerfully, run up about 25%, and then suddenly pulled back 8%. The financial media immediately began questioning whether the move was over. Online forums filled with bearish predictions, even seasoned traders were shaken out. But those who understood the rhythm of major moves recognized this for what it was, a perfectly normal retracement within a powerful uptrend. When the stock resumed its upward march a week later, it climbed another 70% without those who had been shaken out. This understanding brings a completely new dimension to your market perspective. Rather than seeing these pullbacks as threats, you begin to view them as necessary components of healthy trends, like the inhale before a deeper exhale. The market doesn't reward those who panic at the first sign of weakness. It rewards those who can distinguish between temporary weakness and genuine reversals. Let me share a powerful framework for distinguishing between normal pullbacks and actual trend changes, because this discernment is what allows you to maintain your conviction when others are abandoning ship in a moment of uncertainty. If you've ever been shaken out of a position only to watch it continue moving without you, type "shakeout victim" in the comments. Recognizing this pattern is the first step toward breaking it. The ultimate insight that separates market masters from everyone else is their ability to distinguish between normal, healthy pullbacks and genuine trend reversals. This discernment is not just a technical skill, it's an intuitive understanding that becomes part of your trading DNA through experience and careful observation. The revelation that transformed my own trading journey was recognizing that most price movements exist in a dialogue between buyers and sellers, creating a rhythm that tells a story if you know how to interpret it. When a stock in a strong uptrend pulls back, look closely at the character of that pullback. Is it occurring on declining volume, suggesting merely an absence of buyers rather than aggressive selling? Is it respecting logical support levels like moving averages or previous resistance zones? Does it maintain the structure of higher lows that defines an uptrend? These are the fingerprints of healthy pullbacks, the ones you should be comfortable holding through, even embracing. The breakthrough moment for many traders comes when they finally understand that these market reactions aren't flaws in a trend. They're actually necessary components that keep the move healthy and sustainable. Just as a marathon runner can't sprint the entire 26.2 miles, without pacing and recovery, a stock can't move straight up without periodic consolidations. These pauses serve multiple crucial functions in the market ecosystem. First, they clear out weak hands, those traders who lack conviction and will sell at the first sign of uncertainty. Second, they allow professional institutions to accumulate more shares at better prices without driving the price up too quickly. And third, they create the technical foundation necessary for the next leg higher. Without these consolidations, trends would become parabolic, unsustainable, and ultimately collapse in dramatic fashion. I remember watching a particular stock during a major bull run that would routinely pull back 8 to 12% before resuming its uptrend. Each time this happened, financial media would declare the move over. Online forums would fill with traders claiming they had exited their positions. But those who understood the natural rhythm of market movements recognized these pullbacks for exactly what they were: opportunities, not threats. The stock ultimately delivered a 600% return over 14 months, but with numerous pullbacks along the way that shook out the impatient. The mindset shift that occurs when you internalize this knowledge is profound. Rather than fearing these reactions, you begin to anticipate them. Rather than being surprised by them, you plan for them. And most importantly, rather than panicking during them, you recognize them as the natural breathing pattern of a healthy trend, the inhale that must precede a deeper exhale. This perspective completely transforms your relationship with volatility. What once felt like chaos begins to look like order. What once triggered fear now creates opportunity. But this enlightenment doesn't come without a price. It requires you to override your most basic survival instincts that scream for safety at the first sign of danger. Let me show you the specific technical framework I use to measure the health of pullbacks. A system that will help you determine when to hold tight and when to genuinely consider exiting a position. If you've experienced that moment of clarity, when you realize pullbacks are actually opportunities rather than threats, type paradigm shift in the comments. I'd love to know who's had this trading epiphany. What many traders never realize is that the market has an almost sentient quality in how it tests your resolve. This isn't just poetic language, it's a reflection of the collective psychology of all market participants, creating predictable patterns. The market has developed an incredibly effective method of testing your patience through calculated reactions that occur at precisely the moments when holding becomes most uncomfortable. It's as if it knows exactly where your breaking point is, because in many ways, it does. These shakeouts aren't random or accidental. They're an integral part of price discovery and trend development. The market uses these pullbacks, like a sieve, systematically shaking loose all but the most determined traders. What's happening behind the scenes during these moments is a massive wealth transfer. From the impatient hands who sell at the first sign of trouble to the disciplined ones who understand the larger pattern and hold their positions with conviction. I had a profound realization about this mechanism while watching a stock that had been trending upward for weeks suddenly drop 15% in 2 days on no significant news. The online forums exploded with panic. Retail traders dumped their shares in droves. Yet when I examined the volume patterns and institutional activity, I noticed something fascinating. Smart money was quietly accumulating during this panic. 3 days later, the stock not only recovered but surged to new highs, leaving behind all those who had been shaken out. This wasn't coincidence. It was the market's natural filtration system at work. This brings us to perhaps the deepest truth about market success. Discipline isn't the absence of fear, it's the mastery of emotion. The enlightenment comes when you understand that every trader, from the novice to the veteran with decades of experience, feels the same doubts and temptations. The difference is that successful traders have learned to expect these feelings without acting on them. They've developed an inner resilience that allows them to recognize emotional impulses without being controlled by them. The revelation that changed my own trading journey was understanding that emotions will always be present. They never disappear, no matter how long you trade. The goal isn't to eliminate fear or uncertainty. It's to develop the capacity to feel these emotions fully while still making rational decisions based on your analysis and system. When your positions pause or pull back slightly within an established uptrend, this is precisely when discipline becomes both most valuable and most difficult to maintain. I remember sitting at my desk watching a major position pull back 12% after a strong run. My stomach was in knots, my palms were sweaty, every fiber in my body was screaming to sell and relieve the discomfort. The voice in my head kept saying, "Take the profit while you still can." But my analysis told me the trend was still intact. This was merely a normal, healthy pullback. In that moment, the battle wasn't against the market, it was against myself. And that's the ultimate battlefield where trading success is. Determined. Let me show you how to develop this inner resilience, the psychological framework that allows you to maintain your conviction when everything inside you is pushing for escape. If you've ever experienced that internal battle between your emotions screaming "sell" and your analysis saying "hold," type "inner conflict" in the comments. This recognition is the beginning of true trading mastery. One of the most transformative realizations on my trading journey was discovering how much time and energy I'd wasted obsessing over perfect entries. I'd spent countless hours analyzing charts, drawing trend lines, and calculating ideal entry points, only to exit positions prematurely and miss the substantial moves that followed. This fixation on entries is a common illusion that keeps traders trapped in mediocrity, constantly searching for a holy grail that doesn't exist. The hidden truth that changed everything for me was understanding that you can be surprisingly clumsy with your entry timing and still profit handsomely if you develop the patience to ride the significant portion of a move. Think about this revelation for a moment. Even if you're buying 10% above the ideal entry, you can still capture a 200% move if you have the discipline to stay with the trend. Conversely, the most precise, perfectly timed entry means absolutely nothing if you lack the composure to ride through the inevitable fluctuations that follow. Behind the scenes of every great trader's journey is this profound shift in priority, from obsessing over entries to mastering position management. It's like learning that in a marathon, your starting position matters far less than your ability to maintain pace for the full 26.2 miles. This perspective completely reorients your focus toward what truly matters in trading success. I remember a trade that crystallized this insight for me. I had entered a position that immediately moved against me by about 8%. For days, I berated myself for my poor entry, constantly checking alternative entry points and calculating how much better my position would be if I'd waited. But rather than exiting, I focused on the evidence that the overall trend remained intact. 14 months later, that position had appreciated over 400%, completely dwarfing my initial poor entry. The lesson was clear. My energy was better spent assessing whether to stay in the position rather than lamenting my entry. This brings us to the fundamental metaphor that encapsulates successful trading. This endeavor is a marathon, not a sprint. The market consistently rewards endurance over quick bursts of activity. While many traders operate like sprinters, seeking fast action, immediate gratification, and constant excitement, those who actually accumulate substantial wealth are the marathon runners who maintain steady discipline while others drop out along the way. The breakthrough comes when you truly internalize what endurance means in the context of trading. It's not merely about holding positions for a long time. It's about developing the capacity to sit through the wobbles, tests, and pauses that occur in every significant market move. It's about maintaining your conviction when the path becomes uncomfortable, when doubt creeps in, when the voice in your head starts questioning your analysis. I've watched countless traders start with tremendous enthusiasm, racing ahead with multiple positions and frequent trades, only to burn out within months. Meanwhile, those who approach the market with the mindset of a marathon runner, pacing themselves, conserving emotional energy, and focusing on sustainable practices, steadily built wealth over time. The difference wasn't intelligence or information. It was their relationship with time and patience. Let me show you how to develop this marathon mindset. The specific practices that help you maintain your focus on the longer journey, rather than getting distracted by short-term noise. If you've experienced that moment when you realize trading success is more about patience than perfect timing, type marathon mindset in the comments. I'd love to know who's made this crucial shift in perspective. We've covered the essential truth that transforms ordinary traders into market masters. The ability to recognize and ride significant market moves by developing the rare discipline to sit tight when the market is proving you right. This isn't just another trading strategy. It's a fundamental shift in how you relate to the markets, to time, and to your own psychology. I hope this perspective has sparked something valuable for you today. Perhaps a recognition of patterns in your own trading, or an insight into why certain opportunities have slipped through your fingers in the past. The journey toward mastering this discipline is ongoing for all of us, myself included. We're constantly testing our resolve, battling our emotions, and working to align our actions with what we know rather than what we feel. If you found value in these insights and want to continue evolving your trading psychology, hit the subscribe button. I'm dedicated to sharing the deeper truths about market success that most educators never touch. The psychological elements that matter far more than technical indicators or entry signals. This conversation feels incomplete without hearing your experiences. If something in this video resonated with your own trading journey, leave a comment with "Patience pays." I read every comment and love connecting with fellow traders who are committed to this path of mastery. And if you found this message valuable, giving the video a like helps others discover these insights too. Sometimes the lessons we need most find us exactly when we're ready to receive them. I've prepared a video right here that dives deeper into recognizing those rare, powerful setups that offer the greatest reward-to-risk ratio in the markets. Click and join me there to continue building this foundation of trading mastery, because the most powerful approach combines knowing which moves to ride with the discipline to stay with them.